So I lost 2.11% in this stock. So let me explain what happened here. Let me explain where did I buy the stock, why did I buy the stock, what mistake I made, how I managed to get out of the position. Okay, let us discuss all of that. Okay, so let's first go to the time when I bought the stock. So I bought the stock on this day. See, currently, this is the market is open right now. Today is 26th of, sorry, today is 7th of August. So the market is open right now. But I bought the stock on this day, which is 26th of July. So let me put this tool here. Yeah, see, this is what I saw. Let me remove these lines for you so that there is no confusion. Okay. So this is what I saw. So this is the base. Okay. So the first reason I bought the stock is obviously the moving averages. The blue, the green, and the red. The 50-day moving average is above the 150-day moving average, and the 150-day moving average is above the 200-day moving average. So it's a nice uptrending stage two stock as defined by Mark Minervini in his book Think and Trade Like a Champion or Trade Like a Stock Market Wizard. Okay. It's a nice uptrending stage two stock. That is one reason I got interested in the stock. Second, you look at the base. Let me draw the consolidations in the base. So this is 0.1. This is 0.2. This is 0.3. And this is 0.4. So there are 4 points in the base, which means two contractions or two compressions or two corrections in the base. I want minimum two corrections in the base or 4 points in the base. I need minimum 4 points in the base, which I have here. Okay. Next, this candle completes 0.1. So I start counting from this candle. From this candle, I want minimum 10 candles in the base because 10 candles means 2 weeks. 1 week has got 5 candles. So I need minimum 2 weeks of consolidation. So you see here, easily you have more than 10 candles in the base. So the blue, green, red, which is the moving averages, the 4 points, which means two corrections, and the 10 candles, which means 2 weeks of consolidation. All three criteria are met in this case. So I decided to buy the stock. So I placed my order at point number 3 and I placed my stop loss at this red line, which is 8% below the yellow line. 8% is my standard stop loss. Currently, I am taking 2.5% position size in stocks. That's not constant. This might change in the future, but on this stock, I took a 2.5% position. So I put a automatic GTT order, which GTT means good till triggered. So the moment the stock touches this yellow line, I will get the share. So I don't need to be in front of the screen or my laptop to buy the stock manually. I had placed an automatic order. Now, how can I place an automatic order? You might think this is too risky. What if it touches and comes down? Well, agreed. I am taking that risk, but look at my position size. I am only taking 2.5% position size and I'm keeping a wider stop loss, which is 8%. So, number one, small position size. So, I'm controlling my risk. Number two, wider stop loss, which means I'm giving the stock enough room on the daily time frame to fluctuate before it finally decides to make its started next leg of run. Okay, next rally, so to speak. Now, the mistake I made here is see, after point 2, see, this is point 1, this is point 2. After point 2, I would expect the stock to go up and give me some price action in the green zone. As you can see here, there is not a single candle after point 2, which has comfortably closed in the green zone. That is one negative thing. Second thing, which I must have noticed is after point 2, when it entered the blue zone, it should not have fallen down. It should not have come back to the red zone. Okay. The blue zone is the second quarter, the green zone is the first quarter, and the red zone is the lower half of the base. See, if you look at Indus Towers, the stock that I discussed yesterday's video, see, if you look at this base, after point 2, all candles have closed either in the blue zone or above the blue zone. But in this case, which is PB FinTech, just a second. In this case, the stock that we are discussing, see, after point two, when it goes in the blue zone, see, it falls back and starts to close inside the red zone again, which is not a good sign, right? I should have noticed that, but I did not pay attention. Okay. And I still put the order. Okay. Now, that is something that I should have paid attention to. I was not concentrating. So I accept that I made a mistake here. Okay. Although I did follow all my rules, but if I had taken a closer look at this base, okay, I should have waited. Okay. One good point is I saw this mother baby candle combination. Mother baby candle combination means this is an inside bar, as they call in Western technical analysis. The entire range of this candle is within the range of this prior candle. Okay. So mother baby candle combination is very, very powerful. There is a breakout very likely after a mother baby candle combination. Okay. So that is another reason why I probably would have ignored the price action here. Another thing that I ignored, please pay attention here, is the volatility in this base. Look at these. These are very large candles. Okay. These are very, you look at the shadows, very long upper shadows, lower shadows, very long bodies. What we want is tight price action. If you look at this stock, which we discussed in yesterday's video, see, you want to see small candles like this. Okay. Majority of the candles here are small, but that is not the case in the stock we are discussing. Yeah. See, it is giving us wild movements, okay, which is not healthy. Okay. We want to see tight price action. Very large candle, then a very small candle, then large upper shadow, large lower shadow, large lower shadow. This is what we don't want. We want tight price action as the stock goes towards the right. Now let's look at how I managed the trade. See, the stock breaks out, tries to break out, touches the yellow line, my order gets filled, I get the shares, stock closes below the yellow line. Now, since there is no volume on that day, okay, this is not a real breakout. Remember yesterday's video, I spoke about the characteristics of a real breakout. Once it breaks out and closes above yellow line, it never comes back to close below the yellow line. That's a true breakout. That did not happen here. So I had learned my lesson. I sold half of my shares here. Okay. Very, very tiny loss, negligible. Then I continued. Next candle, again, I don't see strength. At least in the next candle, it should have moved up. No strength in price, no strength in volume. I said, no, I don't want to be a party to this stock. I sold another half. So, which means in two candles, I have already sold 75% of my position. So, out of 100 shares, first I sold half, and then I sold half of the remaining half, which means out of 100, I have already sold 75 shares. Okay. Now, the remaining shares, the remaining 25 shares, okay, or 25% of my original position size is so small that I decided that, okay, if the remaining shares, even if they reach the 8% target, I wouldn't lose much money. Okay. So I decided that that's about it. After this, I'm not going to sell. So I just decided to follow the stock. And look what happens. Comes down, comes down. I'm waiting for a pullback here. I'm not selling my shares because the volume is low. When the volume is low, it means institutions are not selling. And if institutions are not selling, that means they are holding on to the stock. And if institutions are holding on to the stock, that means there is strength in the stock. And that strength is visible here. Okay. The stock shot up 4.13%, but on low volume. That was a clue that I should have sold the stock. Finally, when it pulled back, but on low volume, I should have sold the stock. But again, I was not concentrating. I did not sell the stock. See what happened. It came down. And then again, it came down. Here, I lost my patience. Okay. Somewhere during this day, I ended up selling. I booked around 2.11% loss here. Somewhere here, I must have sold. So the opening was Opening was okay compared to the previous day closed, but it went up and it started to fall back again. So there I lost my patience. I said, no, this stock is not doing what I expect it to do. Okay. If I expect the stock to break out on high volume, by the time this candle comes, the stock should at least be 10% above. Look, I bought here and 1, 2, 3, 4, 5, 6, 7. 7 days I'm holding on to the stock, and the stock has still not closed above my yellow line, which is my buy price. Okay. That is not what we expect. So if if I want to catch a train and I expect the train to come on the platform at a certain time, okay, there is a threshold level of my waiting time. I can wait 5 minutes, 10 minutes, maybe 15 minutes. But if it's half an hour, 1 hour, 2 hours, I'm going to run out of my patience and look for other transportation options. Similarly, 7 days, if I have to wait for the stock to prove itself, okay, and it is still not performing, I ended up selling my shares. So combined, the first sale I made here, second sale I made here, third sale I made here, combined, I would say I lost around 2.11% on this stock. So instead of losing 8%, I lost only 25% of what I initially planned to lose. So this is what we mean by limiting losses. When expert traders tell you to limit your losses and let your gains compound, this is what they mean. You have to manage your position, because not every stock you buy is going to go up. So if it starts to wiggle, if it starts to move near your buy price, okay, and if it starts to fall, be quick to cut down 50 or maybe 75% of your position, because the best breakout stocks are the ones that go up without looking back. Okay, once the gates are open, they come out of the gates very strong and they never look back. This stock never came out of the gate. Okay, so that is the reason why I ended up selling all my shares. 2.11% is a loss that I can take anytime. Psychologically, it is not a problem at all. Like, I initially planned to book 8%, but I ended up coming out at 2.11%, which is great. Okay. So that is how I managed this trade. I managed to limit losses here. So I hope you learned from this trade. If you have any questions or comments, please let me know. Please support this channel so that this kind of videos, okay, will reach to more people, and they also learn the art of breakout trading. I call trading as an art, not a science, because there are too many factors and too many variables when you start trading. There are various risk management system within a given style of trading. There are multiple risk management systems that you can use, which I will discuss in further videos. But there are a lot of permutation combination. Two people using the same system will not have the similar kind of performance, because the way they manage their risk or the way they take the position size, okay, might differ. So that was the reason I'm making these videos, so that you have the tools to begin your trading on a smaller scale. Remember, start slow. Okay, 2.5% position size is not a big deal. You can start with 2.5% position. I have a student who is starting with 1% position size. So he's just testing, probing his skills. Does he have the skills to endure the fluctuations in the market? He's trying to do that. Okay. And I appreciate that skill in my student. He's not greedy. He's not putting 10% of his money in one stock. So learn from such characteristics. Start slow and then gradually increase your position size. Thank you so much.